Here's something that'll mess with your head. Gold just hit an all-time high, and that might be the worst news possible. I know what you're thinking. Wait, isn't gold supposed to be the safe thing you buy when everything else is falling apart? Yes, and that's exactly why you should be terrified. Because when gold breaks records, while the stock market is partying and unemployment is low, it's not celebrating, it's screaming. And if you don't understand what it's telling you, you're about to get blindsided. So listen close, because you're about to see gold in a way you never have before. Let me paint you a picture. Imagine you're at a party. Music's loud, everyone's dancing, life is good. But then you notice this smartest person in the room, the one who always knows what's up, quietly slips out the back door. No goodbye, just gone. You brush it off. But then another sharp person leaves, and another. Do you keep dancing, or do you start asking why they're leaving? That's what's happening right now. And the people walking out, they're central banks, billionaires, entire countries.
They're not panicking, they're preparing. And the door they're walking through is made of solid gold. Here's the thing about gold that drives economists crazy. It shouldn't be going up. Not now. Think about it. The Federal Reserve just spent 2 years jacking up interest rates, doing everything by the textbook to make gold less attractive. The logic is simple. When interest rates go up, you can earn money from bonds or even a savings account. Gold doesn't pay you anything. It just sits there. So by all logic, gold should be tanking. But instead, it's hitting record after record, laughing in the face of every economic model. And when an asset that's been around for 5,000 years suddenly stops behaving the way it's supposed to, that's not a glitch, that's a message. And the message is something is fundamentally broken. To understand what's broken, we need to talk about trust. In 1971, President Nixon took the US dollar off the gold standard. Before that, every dollar was backed by actual gold. But Nixon essentially said, just trust us. And for a while, the world did. The dollar was king. But trust is like a glass vase. Once it cracks, it's never the same. Fast forward to 2008, financial crisis. The Fed prints trillions of dollars out of thin air. Crack. Then 2020, pandemic. The Fed prints even more trillions. Crack. Now it's 2025. The national debt is over $36 trillion. Deficits are exploding, and everyone is starting to ask the same terrifying question. How does this end? There are only two ways. Either the government defaults, which is a catastrophe, or they print more money to pay the debt, which means your dollars become worth less and less and less. Guess which option they always choose. So, when you see gold skyrocketing, it's not because gold is doing anything special, it's because people are losing faith in the dollar. They're looking at that cracked vase and realizing they need a backup plan. The party is still going, the music is still loud, but the smart money is hedging its bets. They're quietly exchanging their paper tickets for something real, something that can't be printed into oblivion. So the next time you see that headline, gold hits new all-time high, don't just see a number on a screen, see it for what it is, a warning siren. It's the sound of the smartest people in the room heading for the exit. The only question left is, can you hear it? All right, let's get into the next section. The smart money is moving. And this is where it gets really interesting. You know who's been buying gold like it's going out of style? Central banks. And I'm not talking about just any central banks. I mean the biggest, most powerful ones in the world. China, they're buying gold by the absolute ton. At the same time, they're dumping US Treasury bonds. They're stacking physical gold like they're preparing for something big. Russia? It's the exact same story. After getting hammered with sanctions, they had a major realization. You can freeze someone's dollars with the push of a button. But you can't freeze their gold. It's physical. It's real. And it's not just them. India, Turkey, Poland, Singapore, the list goes on. All of them are loading up. Now, why?
It's because they see what's coming. They see the writing on the wall. They know the dollar's dominance is fading. They know the system is fundamentally unstable, and they are getting out before the music stops for good. But here's the twist. This might be the top. Wait, what? Yeah, you heard me. See, here's a little secret from someone who's seen these cycles play out a billion times. When everyone is buying something, when the central banks, the billionaires, and even your uncle who watches way too much YouTube are all piling in, that is usually the precise moment when the really smart money starts quietly looking for the exit. Because markets don't just shoot up in a straight line forever. They move in waves. And right now, gold is riding a wave so big, so parabolic, that it's starting to look less like a safe haven and a lot more like a bubble. Which brings us to the crash signal. Here's the part most people just don't get. Gold doesn't crash because it's worthless. It crashes because people get too confident. Just think about it. When gold is screaming at all-time highs, everyone feels like a genius. They think, I'm protected, I'm smart, I bought gold. They feel safe, comfortable. But then something shifts. Maybe the Fed finally pivots on interest rates. Maybe inflation actually starts to cool down for real. Maybe the dollar strengthens unexpectedly. Or maybe, just maybe, people wake up one morning and realize they've been buying gold at the absolute peak of a massive hype cycle. And when that realization hits, the selling starts. And it is brutal. Look at history.
Look at 2011. Gold hit $1,900 an ounce. The experts were on TV saying it was a lock for $5,000. Then it crashed. It took 12 years just to get back to that same level. Or look back even further to 1980. Gold hit $850. People thought it was the end of the financial world. Then it collapsed and didn't recover for decades. The pattern is always the same. Euphoria, then panic, then regret. And right now, we are deep in the euphoria phase. Everyone is talking about gold. Everyone is buying. And that, my friends, is exactly when you should be the most nervous. Because the crash doesn't happen when people are scared. It happens when people are comfortable. So, what does this mean for you? What do you actually do with this information? First, understand this. I'm not telling you gold is going to zero. I'm not saying it's a scam. I'm saying it's overheated. And overheated assets correct. They always do. If you already own gold, don't panic sell. But for God's sakes, don't get greedy either. This might be a very smart time to take some profits off the table, to diversify, or at the very least have a concrete plan for what you will do if it suddenly drops 20, 30, or even 40%. And if you don't own gold, do not FOMO in at all-time highs. That's a rookie mistake. Be patient, wait for the pullback, because it's coming. It always does. And most importantly, remember this. Gold is a thermometer, not a cure. It tells you the system has a fever, a bad one, but it doesn't fix the underlying disease. The real question you should be asking yourself isn't, should I buy gold? It's, what kind of world am I preparing for? Because if gold is right, if the dollar really is losing its grip, if global trust is breaking down, if the whole system is cracking at the seams, then this is about way more than one shiny metal. This is about the future of money itself. So here's my challenge to you. Don't just follow the crowd. Think for yourself. Question everything. Prepare. Oh, and a quick reminder, I'm not a financial advisor. This is for educational and entertainment purposes only. Do your own damn research, make your own decisions. Don't come crying to me if you buy gold at the top.